Hello and welcome to BQ Prime, and you're watching BQ Conversation with Mr. Rampraveen Swaminathan, who is the MD and CEO of Mahindra Logistics. Mahindra Logistics acquired the express business of Rivigo for 225 crores, and we are here to discuss this acquisition and the way forward and the outlook for the entire logistics industry. Ram, thank you very much for joining us on the BQ Prime. To begin with, take us through this acquisition. It's a 225 crore acquisition, brings in a good amount of revenues upfront for you as part of your medium-term plan, right?
Yeah, so I mean, one of our strategic intents has been to grow in the network services segments, including B2B Express. Our own internal business has been growing at around 30% CAGR over the last 3 years. It's roughly now at an 180 to 200 crore annual run rate. And this expansion, this acquisition, when closed, will obviously provide us significant leverage. Firstly, of course, is scale. The combined businesses together, on a trailing 12-month basis, around 550 to 600 crores in revenue. Right. More importantly, I think we get a very strong technology suite, which allows us to improve efficiency and drive better service quality in the B2B Express space, and something which can be leveraged across other parts of our business as well. Our network coverage will expand. With this acquisition, we will now be able to serve 19,000 pin codes across the country. It's a deep network with more than 170 branches across the geographies. And both the networks are quite complementary in terms of their current layout. And therefore, we hope to be able to get a lot of acceleration there. Across the businesses, we have a very strong customer base, both in MLL as well as Rivigo has a strong customer base. So we hope to get cross segment synergies with those customers as well.
My understanding is that it's part of the slump sale acquisition which you've done. The industry is calling it as a distressed sale by Rivigo because they're short on cash. So it's a good purchase for you because it's, I think, 0.6 times their revenues FY22. When you say this acquisition is going to bring in much more in terms of revenues, can you give me an idea on the operational profits and profitability of Rivigos Express business, how it has been, and whether any debt is also coming as part of this entire acquisition?
No, so we're buying the organization, the network, obviously the customer contracts which come along with that, and the technology and the brand. It's an all-cash transaction without any debt along with the business. Right. In terms of margins, the business in the last 12 months did lose money on the B2B Express side at Rivigo. The contribution margins, the unit margins of the business are positive and quite favorable. The business has a very strong, above median revenue yield profile. So it's really an issue of scalability more than anything else. And they've been losing money largely because they've been investing in building that scale. So combining those businesses obviously gives us a big fillip on scale together. That overall tonnage on a monthly basis will go up by 40% almost immediately. And that scale effect is what will actually help us, drive margin expansion, at a net level. If you step back and look at the express segment as a whole, I think you'll find that the segment is growing at a very fast pace and obviously is fairly favorable in terms of its margin profile. We'll not be able to hit, mid-cycle margin profiles immediately, but over the next 2 to 3 years, we expect the business to have a margin profile which is better than some other parts of our portfolio, and therefore it should not just be EPS accretive through revenue growth, but also because of a faster improvement at a margin level or EBIT level.
When do you see this business to be EPS accretive? Because currently you are sitting on a EBITDA margin of around 5%, if I'm not wrong. So is there a timeline when you will be able to turn it around and at least it will be EBITDA break even so that you don't lose out on your profitability margins as well?
Yeah, so we expect the business to be EBITDA positive or EPS accretive over the next 4 quarters. Right. Obviously, we expect to have more margin. As I said earlier, the long-term margin profile we expect in the business we expect to be very positive. and therefore it should help our weighted average EBITDA margins get higher as well. But that's a three to 2.5 to 3 year play. The first focus in the first 12 months is ensuring customer delivery and services remains exceptional, and we kind of turn around to be EPS accretive over the next 12 months.
Is there a synergy play as well for you in this, in terms of, because you said the tech platforms are more or less similar, but you will take some time to integrate, right? In that sense?
Yeah, so I think the tech platform of Rivigo is, everything top quartile in terms of its capabilities. And so that is something which, very honestly, is much better than our existing tech platform. And so we expect that to be a fairly big leverage to the combined business, right? And that's definitely one synergy. I think the broader synergy is just the fact that, just with volume going up, we expect, synergy in three areas. The first one is, given the customer base, we expect to be able to get higher volume growth. So that's one positive synergy. And with many of our clients today, we are often not able to see all their lane requirements because they say our network has not delivered all pin codes. So that's something which will be a positive. The second synergy will be around transportation costs. Combining volume will allow us to get better load across the network, and that obviously means it'll have a favorable unit impact on unit economics. And third one is obviously footprint optimization. We have 32 hubs across the country today. Rivigo has and around 250 branches and hubs and processing centers. So as we commonize across that infrastructure, we'll obviously have a benefit on unit economics as well. So those are the three big levers. You're timing them exactly. Obviously, there are market conditions to play that, and our immediate focus, of course, is most important to ensure customer service, gets better with the acquisition.
You spoke about the fact that it's going to be cash acquisition. So, are you going to raise debt for this acquisition?
Yeah.
Do you need any equity infusion by the parent going forward?
No, at this stage, I think we are planning to fund it's an all-cash deal which will fund through internal accruals and debt. Our balance sheet is pretty strong. It's not very leveraged. And therefore, we feel very comfortable about funding it without any cap raises to an equity route.
Also, when are the revenues of Rivigo get shown in the P&L? Is it going to happen from Q3 onwards, or there is a time for some approvals to come in place before you can do that?
So I think it should happen somewhere by the end of this calendar year or earlier. We obviously are working on closing the transaction, to a certain window, and then so I would expect that the transaction will be closed, and we should see a consolidation impact somewhere towards the end of this financial year.
You've been laying out a good medium-term path of expansion, and I think Express segment was supposed to contribute somewhere around 650 odd crores by 2026 or something. Now this is a front loading through which you have done through an acquisition. Are you still open to more acquisitions in this logistics space? Are you seeing this consolidation happening in the logistics space going forward?
Yeah, I think consolidation will happen. Scale is an important driver for economics in our industry. Current policy is also more favorable as the newer policies and the NLP gets rolled out. I think that will be another fillip to consolidation because it's going to formalize the sector further. So in that sense, I think that's going to play out. Right. Obviously, there are significantly different capital pools which are at play in the industry. And that's an important element to drive consolidation. But broadly, I think it should happen. Right. We've seen several consolidation plays, I think, in the sector over the last 12 months. We ourselves did an acquisition on the last mile delivery space. And of course, we've announced now one in the B2B express space. In terms of our focus around acquisitions, I think our own approach, we laid out a strategy 3 years ago, which we have been fairly diligent on following, expanding 3PL around integrated solutions, and then expanding our network services organically and inorganically. So to that extent, I think if we find and transaction which we think in the long term is value additive and allows us a significant EPS benefit, right, I think it's something which obviously we'll look at very keenly. At the same time, I think our overriding principles on acquisitions have always been around capability and not really around revenue growth. We're not interested in buying an order book. So even today, if you look at the Rivigo transaction, which is proposed, I think scale is a very important element, but bigger elements are capability, technology, network coverage, serviceability, process capabilities. Those are in the long term more enduring, right?
That's true, but you're a listed company, so shareholders will look at returns as well, including your parents. But on the national logistics policy, how does that change for you the way you're going to look at the logistics sector? Because while the policy looks at cutting down logistics costs by half, players like you will have to do a aggressive consolidation to leverage that kind of policy, right?
Yeah, so I think the way to look at the whole anthem of reducing logistics costs, I think is really around productivity-led benefits and not just purchase price benefits, right? So over a period of time, I think the most important thing of the NLP is a recognition that logistics is fundamental to the nation's competitive advantage. You can't make in India if you can't move in India, right? So it's as simple as that. The policy will have three, four big areas of impact. One, obviously, is synchronized infrastructure development, a bit of which we have already seen leading up to the policy announcement with Sagarmala, Bharatmala, and DFCs and some of those initiatives. The second thing is going to be the unification across, across these different forms of logistics using digitization. We should obviously allow a lot of elimination of paperwork, redundant processes, etc., and therefore will be a big efficiency measure for the industry. The third one is just a broader shift to multimodal logistics. And as India needs that shift to move away from road surface to a more balanced profile, that obviously is something which will reduce the logistics cost. I think the fourth and the most important thing, frankly, from our perspective, is the fact that all this will also being accompanied by an intent to formalize the industry further. Right, India is a fairly unorganized and layered logistics sector. So increased formalization, increased infrastructure will mean that there will be a greater accent towards productivity in the way customers design their supply chains, and that should help organized players like us, right, or the 3PL sector to be able to grow. As an instance, for example, in India, 3PL is around 4 to 5% of the industry. If you look at more evolved markets, right, I think you will see that 3PL constitutes 8 to 10% of the industry. Right, and a big lever for that is formalization, is things like GST happening. So I think NLP is a natural extension of that, obviously more sector focused, and that should actually aid a greater migration towards 3PL services across the industry, and that's obviously a kind of a growth catalyst for us.
Just wanted to check on you had earmarked capex in form of expansion plans for the next 3 years. Does it change in any way because of this acquisition?
No, not really. As I said, this is an acquisition we are largely funding through debt and internal accruals, and therefore there is no fundamental shift, right, in terms of our capital direction. Our asset turnover ratio is fairly high because we're an asset-light model. Even our leases, warehouses are things we take on long-term leases, 10 years. So in that sense, we have a fairly high asset turnover ratio, and that intrinsic characteristic of the business will not change.
Does this business also require a higher working capital requirement? Because I was looking at some of the reports, and suddenly for FY23 and FY24, a higher working capital requirement was brought in. So I was wondering how that comes into play.
So to be honest, I don't have specific reference to the reports you are looked at, of course.
But as a general, as an operation?
Yeah, I think generally, the B2B express business, working capital profiles are driven to a fair extent by the end market segments. So there are three broad segments: large enterprises, mid-scale enterprises and SMEs, and pure retail kind of customers. Right, as you move away from large enterprises to retail, obviously it becomes much more of a cash and carry or advance business. And therefore, the revenue mix you have on this business, a segment mix, does obviously wane on the working capital. The Rivigo business, for example, today has a much larger share of small and medium size and retail customers than we have in our business. And therefore, we believe that working capital, blended working capital cycle actually will be fairly efficient.
Okay, but what about large expansion, large scale industries? Are you looking at expanding that as well?
Yeah, we will look at expanding it, and obviously, suggest that as you grow the business, you will have a working capital impact of that, right? Working capital is a function of two things: the cash to cash cycle and the scale of the business.
Yeah.
So as we look at growing, from 600 crores, let's say, to 1,000 crores over the next 3-4 years, obviously there's such an intrinsic working capital volume of working capital which that growth will require. But if we've done the working capital cycle efficiently, which we hope to do, and we've been pretty efficient on our working capital cycle in across MLL, right? We expect that we'll be able to manage that quite efficiently.
Ram, finally, we have the national logistics policy is out, and we have a lot. We have a lot of content and people talking about how it's going to impact. But from an operational point of view, do you see that in layman's term, bringing in re-rating for the entire logistics sector as a whole, as an industry veteran? Do you see that re-rating is expected with respect to whether you are able to scale up in terms of consolidation or the margin profile, the profitability of this sector?
Yeah, so I think, obviously, as an industry participant, I would hope that the industry gets re-rated for sure. But I do think the logistics policy is a very positive impact, and over the next 4 to 5 years, we are hoping we will see increased formalization, right? Far better logistics capability in terms of infrastructure and enabling that, and those obviously helping us create more profitable business models, because a lot of variability we deal in the business will come under control. Right. So those three things should be positive tailwinds for the entire sector. Hopefully, it will also probably drive more consolidation across the sector. And more broadly, I think if it's a strong fillip to the overall economic growth agenda the government has, then obviously the water level of the entire industry is going to rise, because you can't just manufacture in India, right? You obviously have to move stuff in and out of the country.
Finally, you mentioned briefly about the unit economics improvement and the contribution profit. What should be the benchmark we should be looking at when we look at your operations, maybe a quarter, 2 quarters down the line?
So we don't give guidance out as a policy.
No, but currently, what is it? And because there will be a dip in this in the interim as you integrate, and then you will again go back to the same level. So what?
Yes, I expect that over the next 3 to 4 quarters, the B2B express business will turn positive. Right? The exact quarter-to-quarter guidance is something which we don't give, but we do expect over the next 3 to 4 years, through scale and optimization, at a net EBIT level, the business will be profitable, and from there on, it should be fairly EPS accretive to the overall portfolio of Mahindra Logistics.
Okay. Ram, it was a pleasure talking to you today. Thank you for joining us on B2B Conversation.
Thank you very much for your time.
Thank you.